So thanks for everyone who's showed up today for this particular talk. So by way of introduction, my name is Rufus Mwanyasi. I work for a company called Canaan Capital, and essentially what we do is what you may call private placement capital business. So it's really an agency. We sit in between entrepreneurs looking for capital and investors who are seeking to invest in the same businesses. So we are a core team of about 3 guys, but with an extended family of about 15. We cover much of the region, so we have agents in pretty much East and Southern Africa. But as of 2 months ago, we've initialized some presence in Ghana, and so that is the operation. And just to give it a bit of flavor, our agents essentially are the deal sourcing teams on the ground. So we are sector agnostic. So we work with pretty much all entrepreneurs, of course, with the exception of tobacco and guys dealing with weapons. On the other side of the transaction, we have relations with close to about 300 mainly private equity funds. Within that mix, there is what you'll call DFIs or development financial institutions. You have your high net worth investors, and also VC capital, which is a subject I'll be getting into shortly. So that's us. We're based in Nairobi, and I guess let me just wrap it at that. So I take it I'll just jump into the presentation just to save on time. Um, so I was I'm to give just a brief talk on the same, but just to give it some context, I'll say um, largely or broadly we have two markets. So you have your public and private markets. So your public markets is what you'll see as listed entities. In this case, Nairobi Securities Exchange. But lately, and I'll say going back, say in the last 15 years, there's been a new sector, especially within the private credit / equity markets, that has really been growing. So that's what you may call is same thing what you'll see in public markets, but in this case is all transactions are being handled privately. So that is where we're coming from, and perhaps maybe just to proceed, and what I'll say is there's been a lot of quite some interest with the advent of so-called development financial institutions. Now, these particular financial institutions are government-funded entities, mainly from Europe, that have been investing in private entities since the early 90s. And those are the ones that really set the foundation for the private equity market in this side of the world. Fast forward 10 years, so around about 2000, that's when we started seeing real roots forming. Um, then we started seeing them taking positions, equity positions in various sectors, mainly beginning with telcos and financial institutions. So a lot of banks really got help, money for expansion, money to do cross-border expansion, to invest in their systems and to expand their product offering and whatnot. So that has been the evolution since then. So thank you, David, for that. So I just want to give maybe just in 1 or 2 minutes a brief on how that has evolved, particularly for Africa, and that particular site that you see posted. If you can go to page number 8. It gives a bit of description of what we're talking about. So that's just to show the range of so speaking of the whole continent, a variety of sectors that we're talking about. But just to make sense of what I just shared a second ago. So around about 2000, after 10 years of DFIs investing in private public entities, that sort of ushered in now what you'll call private equity funds coming into the space. So the foundation was clearly laid out. So now the new entities that came what you call private equity / VCs. Now, the difference between the two is the stage of growth at the point when they come in. So PEs will probably come at the growth stage where the business is already established and is looking for expansion capital. At the VC stage is where now, really coming at the onset, at the ideation or just when you're just, crafting your business model and, and so it's really at the early stage. So since then, and 20 years in, so this is between 2000 and what you see on the screen, 2019, you see a whole range of sectors that have really been covered. So from financials to healthcare, industrials, materials, consumer staples, so all the way to real estate. But what you'll notice from that particular presentation is that, there's really quite a bias towards financials and IT and consumer staples. So those three particular sectors account for almost 2/3 of what is being invested. So that has been really the evolution. Just to keep it brief. Speaking specifically now for East Africa. There's been, notable names that, and I'm sure you guys have heard of them from Africa's Talking, that got a Series A of about 8.6 million. You have your, whether it's Twiga, whether it's Cellulant, whether it's M-Copper, whether it's Sandy. So you have now all these entities that are now become sort of household names that are beneficiaries of this particular kind of private market in investments. So I'll say this has now been quite. I'll say it's really now and perhaps maybe this is now me making a link and why it's important for this particular presentation to you. It's a lot of the people that are showing interest in going into entrepreneurship. For two reasons. One is really the economic equation, and unemployment levels in Africa and in particular Kenya are so high. We work with averages of about 40%, which is quite steep. So the really viable for those ones who can do it is really entrepreneurship, and I think this is something that is beginning to take shape. So it makes a lot of sense because you're seeing all these droves of people graduating with no meaningful job opportunities. So the idea is just to look around you, what are the problems can I solve? And this does not have to be necessarily a tech thing, but just generally going into entrepreneurship and creating some kind of an economic situation for oneself. So just to wrap it up, I like to just make one reference to page 6. So this is now sort of I kind of skipped. It's now just gives you a broad picture of where we sit as East Africa, and you see mainly the broadness since the early days of 1990 until now. You see pretty much the whole continent covered. With the share of VC deals seeing quite some growth between the 5 years of 2014 to all the way to 2019, and both in terms of the number of deals and in terms of valuation. So you're seeing more and more businesses raising capital, early stages businesses, and you're seeing more in terms of number and in terms of the value going up. And at this point, allow me to just to touch on the last presentation, which is just at the introduction level. What you see there is a report saying that 2 years ago, the level of funding that came into Africa topped about $2 billion. Okay. Now, all this is money looking for interesting ideas to fund for guys who are interested to do business, solving problems within the continent. The amount of capital touched $2 billion. Now, what's interesting, as you may note there, is this is just purely at the VC stage. So we're not talking even about private equity. So this is really businesses at the early stage, okay? And the number there, they're showing that the year-on-year growth, I'll say since 2014 or around about 2016, that number has actually been doubling, okay? So so the previous year, which is 2018, the number was about 1 billion. And then the previous year was around about 600. So you can see almost between 90 and 100% growth in terms of number of businesses being established and number of businesses getting funded and the value going high as well. So this is quite an exciting phase for Africa. And I think it's going to get hot. It's going to see a lot of growth. What I would say is we are going to see more and more outside capital. When I say outside, really outside, meaning outside of Africa, coming into Africa and looking for opportunities. One more thing before I wrap up this particular presentation is just to show you. Let me just look for the particular number. It is, I think, pages. Page 12, if I'm not wrong. Just give me a sec. Yes, it's page 12. So it tells you, it's just breaking it down, and it tells you almost a third of the funding went to Nigeria, about 25 went to South Africa. One of the things I just wanted to highlight there, and maybe just the second last thing I wanted to highlight, is the figure about 85% of total funding going to a quartet versus the usual trio. In other words, the funding funding is biased towards teams. Funding is biased towards so for example, I mean, if you're a duo, then you're better off than a single founder. If you're a trio, then you're better off than a duo. And again, I'm sharing this piece assuming part of the audience, they're guys who are either thinking of doing business and just to help you position yourself, you're better off as a team. But to a more important point I wanted to make is now the next page, which shows you the number of rounds per country and the total funding per country. That's an interesting picture you'll see because it shows you Kenya sitting at second position in both charts. So in terms of total funding per country, in the year 2019, according to Tech analysis, Kenya received almost $500 million. And that's quite something. That's quite huge. In translation, that's roughly about 60 billion Kenyan shillings. All that money looking for businesses to fund. And it's reported about 50 businesses got that financing. So I think that's interesting to just to sort of share that and just to to encourage entrepreneurs there, just working on solutions, to be encouraged that yes, the money is there. I mean, you have your VCs sitting on mountains of capital, and all that capital is looking for a home. The average deals, there was about $5 million. So some of these deals, you might not see them in media or posted somewhere, but, because some of them are, are undisclosed, but that is the reality on the ground. Now, perhaps maybe just to end it, this is just to link up to maybe what David alluded to, saying we're taking up, we're pivoting towards a different presentation today. But from where I see it, I see quite some, I see this is relevant because even with crypto, it still falls within the same space because whatever that is happening within the crypto world is really trying to solve some very difficult questions, whether it's using tech and the things and all affiliated issues there. And all that is still, has actually received a lot of VC support in other jurisdictions. It's just that we've not seen it happening in Africa in a larger scale. So that's all. I just wanted to keep it as brief as possible.